Well, good Monday morning to you. I'm Marlon Bowling with you, your tour guide to the ag commodities. Hope you had a good holiday weekend break. And we have a little bit of news to share with you as we get ready for the daytime session here on a new trading week. We actually had an overnight export sale announcement this morning, and USDA said we sold some soybeans. It was 110,000 tons, and they went to unknown destinations, and that was it. That was the only announcement this morning, so not a big deal apparently. Had a softer tone in the overnight grain trade. Let's see what was going on in the Globex, and we'll start with the corn. Our quotes are provided by bar chart. Well, we had December corn at $6.63 this morning. That would be down 5 cents. And keep in mind, the deliveries start at the end of the month here on the 30th. So we're getting close to running out of time on December corn. March was down 4 3/4 this morning at 666.5. Okay, let's take a look at the soybean trade. We had January 4 1/4 lower this morning. We were at 14.32 per bushel. Moving on to the wheat market, we'll go to Chicago, where we had March wheat down 9. 7.88 per bushel there. And let's check out the Kansas City market. We had March wheat there 3 1/4 lower at 9.08 3/4. It stayed above $9 though. In the Minneapolis market, you had the March contract actually 4 3/4 higher at 9.54 1/4. And looking at the cotton market, we'll go with that March contract there. Wow, down 231 points at 77.87. And I would be remiss if I didn't point out what was going on in the energy markets overnight. We had January West Texas Intermediate crude oil down another $1.93. There for a while, it was way over $2 lower. It was below $74. Now we're at $74.35 right now per barrel. So a lot of weakness there. Lots to chew on here this morning. Let's bring in Brian Hoops, and he is with Midwest Market Solutions in Springfield, Missouri. Okay, we have all kinds of protests going on in China, I understand. Lots of uneasiness over there. We still have lots of protests going on in Brazil. Lots of uneasiness going on there. We still have a lot of uncertainty about the Black Sea region, about weather potential, about the economy, a rail strike. Brian, what are we going to do with all this here?
Good morning, Marlon. You sound much better this morning than last week. We didn't have a lot of news last week because of Thanksgiving, but we certainly don't have a shortage of it coming out of the weekend. As you mentioned, some political unrest in China. Their COVID cases are spiking. The Chinese government wants to lock the economy down once again, lock individuals in their homes. There was some deaths because of a fire because people were locked essentially into their homes. Fire trucks couldn't get to them over the weekend, and that has sprouted all kinds of protests throughout some of the cities in China. So this unrest is weighing on the grain futures. It's weighing on the crude oil markets. Now, these markets may actually be undervalued because we're kind of absorbing some of this news and trading lower if, in fact, they don't lock the economy down and they start letting people move about in China once again. That should spur some interest in buying some of the commodities. But until that happens, we're probably going to see some weakness. We also saw news over the weekend that Argentina was increasing the value of the peso for farmers. And that's just through the end of this year. So they're trying to stimulate farmers selling. In theory, if farmers have higher prices in Argentina, they're going to sell their soybeans. And that should spur some selling interest and pressure our values here in the U.S. As China could theoretically buy from Argentina, but they have a lot of dry weather in Argentina right now. And that's limiting some of the farmers selling. So it's a lot of things, a lot of moving pieces going on, and I think that's going to be the case here for the next at least 30 days as we go into the end of the year. We talked about dry weather in Argentina. Certainly that bears watching, but plenty of rain in Brazil, and that country has about 85 to 90% of their corn and soybeans seeded. So there's really not any crop issue going on right now in Brazil, but Argentina certainly bears watching.
Right now, the U.S. dollar index, the December futures, are down 167 points right now, so not doing too much. The Dow, though, this does bear watching. It is under pressure with a lot of concern about the global economy and everything going on around the planet over the weekend, down 227 points right now. We'll come back in a moment and we'll pick up where we left off. We'll talk with Brian Hoops and we'll talk about livestock right after this. All right, let's go back to Brian Hoops and let's talk a little livestock market action here. Well, as we finished up last week, it was just kind of a tumultuous week here, Brian. Everything went in fits and starts. We had short trading days. We had non-existent trading days. We're coming up on the end of the month here, and I don't know what you're going to use for guidance here when it comes to your cattle and your hog market activity the next day or two.
Well, cash trade last week was very strong, $2 to $3 higher on a dress basis, $3 to $4 higher live. I don't know that we're going to repeat those type of trades. The packer margins have moved into the red. So they're about $49 to the negative right now, which indicates packers normally would pull back on their kill speeds a little bit. They're losing money for every animal they kill. They're going to cut back on those, I think. And that could pressure the cash markets here for a couple of weeks as they try to regain some of their lost margin. The futures market acts like it's anticipating this already. We were lower Wednesday, lower again on Friday, and there's a strong seasonal tendency to work lower in the futures market over the next 2 weeks. So we certainly could be expecting lower futures here with the cash market to follow. Probably at best, you're looking at a steady cash market this week, but possibly could be a little bit softer, especially if those packers do slow their kill speed.
I am showing live cattle prices right now with our quotes provided by Bar Chart. Do you go by the February pretty much on the live cattle?
Yeah, you have to go by the February right now as there's a front month contract. December option expiration is this upcoming Friday. A week from today will be first notice day for those December cattle futures. We don't expect we'll see any deliveries, but you never know at this point in time. If the cash market holds steady and the futures would really plunge for some reason this week, then maybe you would see some.
Okay, so February on Friday was down 30 cents. It finished at 155.12. Well, let's recap where we ended up on the feeder cattle market. And last week on that abbreviated trading session, we had the January feeders 95 lower at 178.30. What do you think will happen with the feeders today?
Yeah, and most likely we're going to see a little bit of strength, I think, in that feeder cattle market with the lower corn board. Again, you're probably looking at real choppy type action in the live cattle and the feeders this morning. Really looking for some sort of a direction. The futures market, I think, is trying to anticipate, as I said, lower cash trade this week. But again, it's going to depend on show list numbers and how aggressive the packers are at killing their cattle this week.
All right, and finishing up on lean hogs, we had February down 30 cents on Friday at 88.50. What do you see for an opening call this morning?
Well, if you look at the bid and ask this morning, we're looking at fully steady type calls in the hog market. You know, it looks to be just a steady range bound affair. The cattle market, looking at the bid ask, you're probably looking at actually 5 to 10 cents better on the February to open up the trading day this morning.
All right. Well, great to talk with you. Thank you, Brian. Appreciate it very much. And we'll get things off and rolling here in just a few minutes for what could be kind of a semi-normal, quasi-normal trading week as we get into the end of the month. Thanks, Brian. Appreciate it. Brian Hoops of Midwest Market Solutions. Janet, with that, we'll kick things off in about 6 minutes.